In today's video, we're going to focus on understanding the different types of stocks that are available for traders and investors. When you understand the various types that are out there, this can help you make decisions that really assist you in whatever goal that you have. So we're going to first start off with the common stock. And this just represents partial ownership in a company and provides a shareholder with voting rights. I doubt you'll ever use them, but it's there. And as a common stockholder, you have the right to vote on corporate policies and even elect the company's board of directors. So this means that you actually have a say in the decision-making process. It's kind of cool. Now, common stockholders, you also have the potential to receive dividend payments. Now, dividends are just a share of the company's profits that are distributed to shareholders. However, common stockholders, you may be at a lower priority in receiving your dividends and assets in the event of a liquidation compared to a preferred stockholder. Now, preferred stockholder, this has some unique features compared to a common stock. And one of the key advantages is the priority it gives to the shareholders in receiving a dividend payment. So unlike common stock, which may or not pay dividends, preferred stock typically comes with a fixed dividend rate, a yield. So this means that preferred stockholders have a higher chance of receiving regular income in the form of dividends. Now, penny stocks, these are low-priced stocks. They have high risk and they can be quite volatile. Now, investing in penny stocks can actually be quite enticing because of the potential for really big returns. But you really have to understand the risks that come with it. Penny stocks, these are often associated with fraudulent activities like a pump and dump schemes. And all this is where an individual or individuals artificially inflate the stock price before selling their shares for a profit. So if you're going to be looking at penny stocks, you got to really take caution with these. But they do have some really great movements in them if you know what you're doing. In fact, you can be looking at 8% to 40% moves in a couple of days, up to 100% moves. So it all depends. So they're not that bad if you know what you're looking for. Growth stocks versus value stocks. So when it comes to investing in stocks, there's two primary strategies that traders or investors are going to consider: a growth stock and a value stock. Now, growth stocks are shares of companies that are expected to experience significant growth in the future. Now, value stocks are shares of companies that are considered undervalued just based on their fundamentals. Growth stocks, these can be high risk, high reward approaches, while value stocks, these tend to be a little bit more stable and less volatile, and it makes them attractive to investors that seek a more conservative approach. Blue chip stocks, these are shares of well-established companies with a large market cap. Now, these companies, these have a long track record of generating consistent earnings, and these are considered by many to be very stable investments. So investing in blue chip stocks, these can provide you with some stable returns over the long term. Makes it a pretty popular choice for both experienced investors and those that are new. Income stocks, these are also known as dividend stocks, and these are very popular for investors that look for regular dividend income and stability in their portfolios. So these stocks belong to companies that have a track record of generating consistent cash flow, and these are considered less volatile compared to growth stocks. Large cap versus small cap. So when it comes to investing in these, one important factor is the size of the company that you're investing in. So stocks are generally categorized based on their market capitalization. IPO stocks, these are initial public offering, and this occurs when a private company decides to go public and offers its shares to the general public for the first time. Now, these stocks can generate a lot of buzz right at the beginning, and the potential for growth is certainly there. But again, they come with risks and uncertainties. Just because it's being offered for the initial price of whatever doesn't mean it's ever going to stay there. Could just drop the next day. We don't never know that. So understanding the different types of stocks, it's pretty important for making decisions on what you're going to tackle. Whether you're looking at common stock, preferred stock, penny stock, growth stocks, value stocks, doesn't matter. Each type have its own unique characteristics and risk. So a dividend growth investor, for example, these people are going to look for stocks that pay a consistent dividend that grows every single year. Day traders may look for penny stocks, stocks under $5, and they're looking for some volatility entering the stock. They'll even look at IPOs. Investors focus on generally blue chip stocks, value stocks, growth stocks. It just depends on their preference. You really can't go wrong with any of them. Just your personal preference. That's all it is. And, when you're building your portfolio of whatever you're going to trade, you got to really understand whatever goals that you have. You have to understand your risk tolerance. You may not be suitable for IPOs. You may not be suitable for penny stocks. You may like the consistent growth of dividend stocks. Everyone's different. Anyways, it's a very short video just to get you caught up on what kind of stocks are out there. Thanks for watching. If you enjoyed this video, hey, you know what? Hit like, hit subscribe to our channel. We'll talk to you soon.